Finance is a broad field that encompasses the management, creation, and study of money, banking, credit, investments, and assets. It involves the art and science of how individuals, businesses, and governments acquire and manage financial resources over time. Here's a breakdown of key aspects of finance, core concepts, money management, how funds are obtained, allocated, and used. Risk-reward trade-off, the fundamental principle that higher potential returns usually come with higher risk. Time value of money, the idea that a sum of money today is worth more than the same sum in the future due to its potential earning capacity. Main branches of finance. Personal finance focuses on an individual's financial decisions and activities, including budgeting, saving, investing, debt management, insurance, and retirement planning. The goal is to achieve personal financial goals. Corporate finance deals with the financial decisions of businesses such as capital budgeting, deciding which long-term investment projects to pursue to maximize shareholder value. Capital structure determining the optimal mix of debt and equity financing for the company. Working capital management, managing short-term assets and liabilities to ensure operational liquidity. Public finance concerns the role of government in the economy, including taxation, government spending, debt issuance, and the allocation of public resources. Key areas and services within finance. Investments involves the process of buying and selling financial assets to generate returns. This area includes asset management, professional management of investment portfolios for clients, asset pricing, using quantitative methods to estimate the value of assets, financial planning, providing advice to individuals on their financial goals and investment strategies. Financial institutions, the organizations that facilitate financial transactions, such as commercial banks, offer services like savings and checking accounts, loans, and credit cards to individuals and businesses. Investment banks assist corporations and governments in raising capital, mergers and acquisitions, and other financial advisory services. Insurance companies provide coverage against financial losses due to various risks. Brokerage firms facilitate the buying and selling of securities. Credit unions, member-owned financial institutions. Financial markets, platforms where financial assets are bought and sold, enabling the flow of capital between investors and borrowers. Examples include stock exchanges, bond markets, and foreign exchange markets. History of finance. The origins of finance can be traced back to ancient times, with early forms of money lending and record-keeping in civilizations like Mesopotamia and Greece. The modern banking system evolved from medieval and Renaissance Italy. Significant milestones in financial theory and practice include 1950s Harry Markowitz's work on portfolio theory and Modigliani-Miller theorem on corporate finance. 1960s development of the capital asset pricing model by Bill Sharpe and John Litt, which provided a framework for measuring risk and expected return. 1970s, the Black-Scholes option pricing model revolutionized the derivatives market. In essence, finance is a dynamic and critical field that underpins economic activity by facilitating the flow of money and capital, enabling individuals to manage their wealth, businesses to grow, and governments to fund public services.